Welcome to Real Talk with Real Estate Pros. Where we bring you exclusive interviews with the real estate experts. We bring you exclusive interviews with their journey to success and learn how to go the extra mile to serve their clients' wants and the extra mile to serve their clients' wants. Here's your host, John Money McKinley. Here's your host, John Money McKinley.
Morning, everyone. Welcome to another edition of Real Talk with Real Estate Pros. Want to thank everybody for being here. We've got a really good show coming up. As we all know, we are at the end of another month. Can you believe we are already almost halfway into the year? This is crazy where time is going. And today we've got some great information that we're going to be sharing with you. I have a favorite on the show today. His name is Greg West. He is our credit expert extraordinaire. And Greg really is going to have a lot of great information to bring to us today on what is the coming changes that are coming in the world of credit reports and how this is going to affect people that are going to use credit in the near future as well. We're also going to dive into what's going on with the wonderful lawsuit that was brought to us by the nice folks at the federal department and, in my opinion, the fintech companies to go after our real estate agents and brokers, and we'll dig into that a little bit as well. But also, too, we're going to be digging into something that's happening here at Real Talk with Real Estate Pros. We are going through a lot of changes and a lot of remodeling to be able to bring you guys some great information on a weekly basis. And we're in the process of having the studio completely redone. As you can see, we've had the logo updated, and in the coming weeks, you will see we're going to be moved into a completely new studio that's really going to allow us to go to the next level with this. But with all of that said, I'd like to bring on our featured guest, Mr. Greg West. How are you on this fine morning, sir?
Good, brother. How are you doing?
I'm doing good. Well, thank you as always for coming on board, sir. It is always a pleasure to have you here, and I'm excited about what we have going on today's show. But what I want to do is I want to bring this to the attention of my realtors out there and people that are in the wonderful world of real estate and do this as a living. There's a lot of things that have changed and are happening. And I'm sure, Greg, you've heard about AI, haven't you?
Oh, absolutely. I try to tell people to avoid it with their disputing, but go ahead.
Yeah, I mean, AI seems to be the buzzword everywhere. And you know as well as I do, Greg, we come from a time where we used to have a much more, I don't want to say intimate, but for lack of a better word, there was a much more of a connection with our clients, was there not?
Absolutely. Face to face most times.
Exactly. And allowing us to connect with them and really for us as well as the clients to be able to determine if we were really the right fit for each other. And that's why I wanted to introduce this to everybody here. This is the official seal of approval for the human touch, which we are going to start rolling out now at John Money McKinley Mortgage. And this is going to be something that, in my opinion, is really going to change the world of real estate as we know it today. It's really a way that's allowing us to stay connected with our clients and have that human connection and not be stuck with dealing with machines. Because, Greg, you know this, especially in your world of real estate. How much is done by machines? In your world of credit, I'm sorry. You're the credit. I'm the real estate mortgage guy.
Right.
I get confused sometimes.
Well, if you're doing it online, it's basically all machines for the most part. Now, if you do your disputing with paper, certified mail, you get some human touch in there. But yeah.
Exactly. But I mean, everybody knows when you're out dealing with businesses, usually you're dealing with a machine. And at the level these machines are moving to, it's getting quite scary. A lot of times, if you think you're talking to a human, you're actually talking to a machine.
Yeah, I get that a lot, actually. When people call in, they're shocked that a human actually answers the phone. Yeah, I don't even send them through a voicemail. It comes right in. Yeah.
Exactly. But I want to let everybody know, realtors especially, this is something you're going to want to be on the lookout for, my contact information is right up there. Please feel free to send me a text. Just send me a quick text with your name and what real estate office you're with and your contact information, and I'll keep you up to date because we're going to have some live classes that are going to be going on starting in June that are really going to help us deliver that human touch back in the world of real estate. But with all that said, I'm done talking about that, and I really want to get into some very good information here with Mr. West and let him dig into, because Greg, you had a client not too long ago get an interesting letter from the nice folks at the at a creditor they had. Is that correct?
Yeah, not from a credit agency, but a creditor. Yeah, 2 weeks ago, to be exact. And I read through it and I saw something I'd never seen before. Basically, that I'm not going to read that whole letter, but in summary, they ended up having a credit limit lowered. And I know personally this guy had close to a 700 score. Credit card utilization was high 20s, getting ready to hit to 30%, so not quite danger zone just yet. And he got this thing. And what it is TransUnion apparently, and apparently from what I've looked into, Experian and Equifax also have some certain models where they can sell to some lenders. And this one's called the TransUnion Rapid Default Model version 1. And you can see on there that his score was a 442 based on the 300-850 model, according to the letter there in the second paragraph.
Now, wait a minute. I don't mean to interrupt you, but just so everybody can keep up with where this is going on and what's happening. So, just to refresh, your client here that received this letter was in the traditional credit scoring models that we all use today when applying for credit, was in the 700s. Is that correct?
High sixes, low sevens, depending on which agency, yes.
Okay. So a relatively good, stable credit scoring number.
Mm-hmm.
But now the new model, which they're telling you about here, which is the triple cash rewards account, talking about the new model, they are now basing this person with the rapid default model at a 442.
Right. It's not them changing the model per se. What it is, it's an additional one they've created to help. In this case, the lender's looking to lower their risk. So like in this particular fellow's case, for 2, 3, 4 years, they've been transferring balances to get zero interest rates. That's what they tell you to do when you have high rates. Well, that's what he's been doing. And apparently now it's hit a point where, they've seen what he's doing. He's not really paying the debts down. He just keeps moving them around. And apparently it's being penalized now. So his limit was lowered to just above what he owed on the card, which of course hurts the score because it makes your utilization higher. So I had never heard of this thing. And as you can see with the next ad I just sent you, they back in 2019, they came up with this thing, but this is the first time I've heard anything about it from any clients. So, and when I went searching for information, there was a couple Reddit groups and some others, but most of them were dated April and May of this year, and they involved U.S. Bank. So right now, it looks like U.S. Bank's the biggest one. Who knows if more will be added later, but as you scroll down there, it came up with a program to help banks, lenders, avoid fraud. Like this article makes it sound like they're trying to get people that get a bunch of credit cards, run them all up, and then don't pay. But from what I'm saying, this is more of let me backtrack. A lot of people, there's a big business out there where you can do credit card churning. You can make money on bonuses when you spend a certain amount of time transferring debt around with zero interest rate, and you can actually make money with your cards, with your cash backs and whatnot. Well, now it's getting to a point where it looks like if you're getting too many cards, playing this game for too long, they've kind of found a way to look for people that might be suspect to getting themselves in trouble with it as far as start defaulting, because credit card debts at all-time default rates are all-time highs right now. That might be why it's just now coming to light, something they did in 2019.
Well, there we've reached a level which it's just astronomical to think of what the credit card debt we are as a nation. It's pretty scary.
It is,
Us as the consumers, as well as the wonderful federal government itself. I mean, the debt is out. It's beyond where it really should be, and we've had to have known this was coming, because just in my business alone, there's a new model that has been added to our credit reports called a trending model. And we're not using it as of yet as far as for basing loan underwriting decisions. However, this is coming. And just like you showed with your client on the other letter that they received, they are looking at one of the models saying, hey, you're low, you're at a higher risk because of what you're doing. Shame on that person for moving his balances around so he doesn't have to pay 30% interest. Don't you know you're supposed to pay that 30% interest?
In an effort of full disclosure, I can't prove this is what caused it, but the likely trigger could have been that particular account, the interest free just ran out, and he paid his first month of interest. So that might have been what set off the whole alarm, but still, you shouldn't be penalized for that.
Well, there's
he's
clearly
still paying everything.
Yeah, there's clearly some changes that are coming. And as with the trending model, that's starting to weigh more heavily on what has your credit history been for a longer period of time. Whereas in today's times, you know this, I know this, let's say you have higher balances on all your credit cards. And I'm looking at a borrower that goes, I want to put 20% down on a mortgage. And I start running numbers and go, well, wait a minute. Your scores are down to a 640, 660, and it's not because you don't pay your bills. It's because you have all these balances that are at the high level. Whether they're zero interest or not is irrelevant. And I run numbers for them and go, well, look, if we pay down this card, this card, this card, and this card to a zero balance or close to a zero balance, not only are you going to save a bunch of money in interest, but you're also going to run your credit score up, typically in the 700s, which will give you a much better number as far as an interest rate on a home is concerned. Well, if we go with this trending model, that's not going to have very much effect until we have a long history of that. And I'm starting to suspect, because that article that we just showed was from 2019. So I hope everybody kind of understands. I'm really thinking the creditors have known this. I mean, these people are no dummies.
No, they do things years in advance.
Yeah. I mean, they're in charge of a lot more money than I think any of us will ever have access to. Plus, they have a printing press. They can print it, but shh, we don't want to talk about that. It's not a conspiracy show. But there's changes coming. And as we've approached the highest levels of debt ever for consumers in America, it makes sense from their standpoint to do this, because as we move forward, they're going to want to see a more stable history on consumers as we move through this incredible economy and move into the next coming 5, 6, 7, 8, 9, 10 years of the economy.
Yeah, they're going to have to do something, because I know you mentioned the printing presses. Well, yeah, they have that, but it still comes down to debt. The money can't be created without somebody borrowing it. So if they tighten things up too much, you're going to have a huge liquidity issue.
Well, exactly. And they're playing a fine balancing game, and I'm always keeping my eyes to start seeing how much the changes are happening with our automated underwriting system, because full disclosure for everybody, when your loan is put together and determined if you can get an approval or not, typically it's done through what's called an automated underwriting system. Looks at your credit profile, looks at your length of history at the job, looks at your length of history of where you've lived, also looks at your finances. There's a lot involved in qualifying for a home loan, more than just the score. However, with these new models coming, that's going to weigh a lot more into it of your long-term history. So, with all that said, people, this is something you might really want to look at is, okay, start looking from now to the future that if you want to have a higher score, you're going to want to keep those balances lower for a long period of time and make sure you do not have any slow pays.
Yep.
Because that's one of the highest things that hurt your credit score, isn't it, Greg?
Slow pays, sure. Well, both. Slow pays is history's 35% of your score, and then credit card debt's 30%. As far as credit card debt compared to what you have access to, utilization they call it.
Now,
not per se the amount.
I'm going to take a wild guess here, Greg. If we're going with these trending models for the new era of credit reporting agency, and we have to have a history, a long history of being a certain way to get a higher credit score, I wonder if that's going to apply to where, because it's happened to people for whatever reason, the payment didn't go through or the check didn't get there in time, whatever reason. I wonder if instead of your scores dropping by 60 to 100 points with one slow pay, if they're only going to hurt you a little bit. What do you think about that, Greg? And I understand this is your opinion.
They are doing so. We talked about on the last show, we did the Vantage score, where you can get a score a lot quicker in a quicker time frame. So I guess that could be possible because the Vantage score, it is a different model, and you're not penalized as much. You can recover quicker, whereas FICO takes 6 months. You can get a score on Vantage in 1 month. So maybe.
I'd be real curious to see how they're gonna run down that road. But we have to remember the credit reporting agencies, love them or hate them or whatever you think about them, is one of their jobs, and the reason they're in business is because the financial institutes trust their models to allow them to determine what is the risk for lending you the money. I mean, we can we can complain about it, we can whine about it and cry about it, or we can go, okay, tell us the rules so we know how to play the game.
Yeah, they've used them for decades. That's why there's so many different models. They keep updating. The FICO Fair as a company keeps updating it based on what the demands of the people buying the reports are. That's why I think they're up to model 10 and 10T now.
Exactly. Well, I would definitely like to get into our next topic here, and this is something that's near and dear to my heart, what's going on in the wonderful world of real estate with real estate agents, realtors, and people that sell real estate for a commission. I don't know if everybody's aware of this, but there was a big, nasty lawsuit that was brought against the National Association of Realtors, started right around when the current administration took office. And what they took to court and won was they've stated that a real estate commission was done with collusion because there was supposedly a set agreement on what real estate commissions were. And unfortunately, the National Association of Realtors went and did a big settlement to get this taken care of, and it turns out it was about a $418 million real estate commission settlement.
Yeah. Where'd the money go to?
That's a good question. I'll give you 3 guesses: attorneys, lawyers.
Yeah, right.
And $1.25 for the quote-unquote people that were injured in the settlement.
Yeah. It's like me getting my 50-cent AT&T settlement check years ago or whatever it was.
I bet you felt so good about that, did you? Oh, look. But with this said, all of these changes are getting ready to take place here in the next coming weeks / coming months. Now, I am a licensed loan originator. I am not a realtor or real estate agent, so I cannot speak for real estate agents. However, I do work with real estate agents very closely, and this is going to bring some changes to the market. And let's be honest, coming from the standpoint of a lender, we've had our teeth kicked in by the federal government for a long time. Part of what's happening with this as well too is there's some companies out there, we call them fintech companies. You may have heard of them, the Zillows and the other companies that do a lot of the quote unquote online real estate companies.
Mm-hmm.
And in my opinion, they put a lot of money into the lobbying to get this pushed as well, because that benefits their business model. And
Sure.
a lot of things that, just to let everybody know, is I've been in the wonderful world of mortgage lending since 1999. Real estate commissions have never been set. They have always been negotiable between the home seller and the realtor or the real estate agent. And I just think that's a lot of part of the issue is a lot of people were not aware of that.
Yeah, I remember we talked about that. I was not aware of that. I just assumed 6% was just standard, whatever, what it always was, at least up here anyway.
Exactly. And that's kind of what went on. And that's what's frustrating about NAR not actually stating, going, wait a minute, real estate commissions are negotiable across the board. So, are some things going to change? Yes. We may start seeing more. I know even VA has made the announcement, because before, as a veteran, you could not pay a real estate commission when you're purchasing a home. Well, they've changed that now, and they're allowing that to happen. And what we think we're going to see coming across the board, whether it's conventional, VA, FHA, USDA, is we're thinking that it may just go to where, okay, whatever the commission is between the buyer and the buyer's agent will just be simply put as a seller's credit to the borrower. So this is one
Makes
possible.
sense.
Yeah, this is one possible solution is, okay, Mr. or Mrs. Seller, the buyer wants to buy your home for X. They would like you to help with closing cost of Y, and they would like you to pay the buyer's real estate commission of Z.
Yeah. Just adds to the negotiation process.
Yeah, which at the end of the day, it's still going to balance out to basically work the same way. Because let's be honest, in today's world of buying homes, it's an expensive process. And this is why, especially in my opinion, moving forward in the world of real estate is you really want to have the right people in your corner when you're buying and selling real estate. Because and I actually think this is going to bring a lot of good as well too, even though it stinks when change happens. It's really going to show us who's at the top of their game and understands the world of real estate, because a lot of the fly-by-night realtors that come into the business, just like they do in the world of mortgages, whenever the mortgage markets are hot, fly-by-night mortgage people come into the business. People like me who have been in this business a long time, we hate it because they give us a bad name. They don't give that care and understanding for the clients. They're just in it to try to make a quick dollar. As soon as some hiccups come, they're gone, and you can never hear from them again.
Yeah, makes a huge difference. I think I've even told you this before. Back in 2008-9, the last crisis, I was working with probably 24 mortgage guys at that time, and you're actually the only one that's still around.
Wow, that is
Yeah.
makes me feel good. I mean, I love what I do. It's a wonderful thing to be able to help people become homeowners. It's a very good feeling. I have helped so many people that didn't own a piece of real estate become multimillionaires through real estate investing.
It's great.
I mean, it's an incredible thing that I really am excited about, and that's why I want to bring up again too the THT seal of approval, the human touch program that we're really starting to roll out. There's just so much that's involved in this that, in my opinion, is really gonna help real estate agents in this new time we're going into, as well as with my customers and the experience they're going to have and the things that we're going to be able to share with them to really make sure that they have a full understanding of going into what's happening and what's going on. Because, Greg, you and I come from a time when we were doing business with people, you did business like we are right now, across the table from each other, face to face.
Travel to the office.
Yeah, being able to go over documents and show you these things. And unfortunately, in the digital world, look, we know these corporations, they love to have the machine handle it because the machine doesn't cost them much money.
Yep.
However, the machine doesn't care about you. The machine doesn't know what you and your family need.
And that is the word they're using for AI, is machine now. Sounds better, I guess.
Reminds me of a movie. What was that movie? Big muscular guy. Oh, gosh. What is the name of that movie?
Arnold.
I'll be back. Well, with that said, I want to get into one of our featured segments here that a lot of people seem to be a fan of, and I will get into this right now. I will bring in the wonderful person who introduces this right now.
Now it's time for Real Estate in Space, where only NASA knows if it's real or if it's CGI.
All righty. This is the Real Estate in Space section. We always like to end the day with a smile on your face and leave you going, Something to think about. And this is from everyone's favorite, Greg. Everybody loves old Elon, don't they?
Oh, yeah. I don't know how he runs 20 businesses, but it's awesome.
I know. He runs 20 businesses, and he's able to have, how many different podcasts does this guy get on? I bet if I can, hey, everyone, do me a favor. Help me get my numbers up on Real Talk with Real Estate Pros so they look big. I'll send it over to Elon's people, and I bet we could get Elon on this show. We'll have a lot of good questions for Mr. Musk. So please subscribe, like, and share. Try to get me to 1,000 subscribers, and I'll see what I can do. But according to Mr. Musk now, SpaceX's Elon Musk says Starlink satellites have never dodged UFOs.
It could be taken two ways. Maybe there's no UFOs, or maybe they smashed into them because they couldn't dodge them.
That's a good question, but we've got the world's premier expert on the wonderful electric cars and the space entrepreneur with a what? Just a 9 out of 10, physique on him.
Right.
The epitome of health. But yeah, I thought that was very interesting to make for a good addition to Real Estate in Space.
You'd think they'd be more worried about all the supposed space junk that's zipping around out there, but I don't know.
Yeah, I've always wondered that.
Supposedly there's hundreds of thousands of pieces or something.
Yeah. But then we have another very interesting thing here that, and I think
every time I see one of those, go ahead. Never mind.
I know.
I can't say what it looks like, but go ahead.
Yeah, I'll go on. Don't get excited.
Oh my God.
Well, we'll get into this next wonderful article that I found. AI may be blamed for our failure to make contact with alien civilizations, Greg. You see, the rise of AI might explain why the search for extraterrestrial intelligence has yet to detect signatures of advanced technology civilizations elsewhere in the galaxy. It's AI's fault, Greg.
Doesn't even make any sense.
Doesn't have to make sense, sir.
Unless the AI is jealous and doesn't want any competition or something.
Exactly. See, it's out. That's what it is, Greg. AI is out there hiding all of the messages that we've been receiving. You understand, right?
Oh, sure.
Maybe AI is secretly at Area 51.
Never know.
Well, Mr. West, we come to an end of another show. I don't want to go too far down a rabbit hole with Real Estate in Space, but anything you would like to share with the fans of my show on how they can get a hold of you. And I'm going to strongly recommend, if you guys have any credit questions, you can actually get a hold of Mr. West. He even answers his phone. I know this is crazy. He doesn't have an AI answering his phone. He's not out there trying to talk to the space people.
Yeah, I do answer the phone. If you get voicemail, leave a message. I'll get back to you pretty quick. It usually just means I'm on another call. I don't like to leave one person hanging to grab another one calling in. I think it's rude. But yeah, you can text or phone me at 859-625-4546. I usually put it on the top, but I forgot when I got in here today.
Okay. Well, I appreciate it. And just to remind everybody, at the end of every month, on the last Wednesday of every month, Greg and I like to do a show where we really dig into what's happening in the world of real estate, mortgages, and credit, just to kind of give everybody a recap on what's happening in the world of real estate and credit and mortgages. But with that said, Mr. West, we will see you next month. And I'm going to let everybody go.
Welcome to Real Talk with Real Estate Pros, where we bring
properly here. Apologize about that. Technical errors. We are in the middle of remodeling the studio, so that's where the problem is. But if y'all would do me a favor, please like, subscribe, and share this. And if you know anybody who is a real estate expert that you think would be great on this show, please shoot me a text. I would love to chat with them and see if they'd possibly like to come on the show. Also, too, if you have any questions on what's going on in the world of mortgages, shoot me a text. And if you want to find out about the upcoming class in June on the Human Touch copyright, or I'm sorry, seal of approval, that program that we're really rolling out that's going to let you discover how to stand out in a digital age dominated by AI while maintaining the human touch, let me know. I'd love to chat with you. Thank you all, and I will see you all next week.